Alrighty, good morning, everyone, and welcome to the Monday Macro. Big week this week. Nvidia earnings, the what just happened with Jackson Hole and Jerome Powell situation. Obviously, we'll go through that, and of course, everything else to do with stocks, commodities, and cryptos. Guys, it was a pretty big, eventful week of rotation with Wall Street. The last I would say 2 weeks, and particularly we saw that really play out on Friday with pretty much the Fed saying they're going to do cuts, and most likely now the market's starting to price in several cuts all the way through into 2026. I hope you had a great weekend with your friends and family. As always, we love to shout out the people that are here early. We got Marv, DB, Clay Stitz, Julian, Jonathan, Vincente, Michael, Stacy, Julian, Andrew, 2023 strong gainer, Clip A. Is that like Clippy? I like it. Andrew, Chris, Professor G, and many others. Thank you guys for joining us here for Monday. So we begin the story, guys, by probably the big one, which is obviously Nvidia earnings. And that is expected to be around 8% move. Okay. So I guess the big thing this week that everyone's going to be talking about is the earnings of Nvidia. You can see here, it's happening after the close on Wednesday, and it's going to bring with it an expectation of around 7 to 8% move on the options market. So this is, of course, probably the most important stock in the markets. We've talked about that for a long time. Will it beat? I would say probably yes, but what do you guys think in the community? Do you guys think that it'll be a beat? I would say yes. And will it therefore go up? It depends. It's got a large gain, so it's going to have to obviously beat and then give good future guidance. I guess you would generally be saying yes to both, but because it's such an important stock, it can also be a catalyst for anything. We'll talk about rotation in a few moments because, of course, that was the story, but let's see what people think here. Body and Soul says, hey, Tom, what's up, man? We got JB Sen says, Google, yes, sir. Yeah, we like Google. Google is cheap in terms of the fundamentals compared to the other Mag 7s oftentimes. And it says here, dope stocks are ripping higher. So dope stocks, obviously from Kevin. Basically, this is usually one of those hype train style sectors that booms then busts. And Andreas says, I got 1,500 to invest today. Oh my goodness. You got to be careful there, sir. He says, well, is Nvidia worth the wait for the results? The thing is, you never chase on these things, man. You always have to find edge. When you find edge, then you would replicate that edge. That's the most important thing. Actually, I've got a quote. Give me a second here. I thought I'd bring this quote up. I posted it actually. I'll have it tomorrow on my LinkedIn. Where is this quote here? It's over on my X account. 1 second. I'm just grabbing it. This is a pretty good read rules to go by. Less trades, or I guess you could say fewer trades equals more wins. Fewer stocks equals more focus. Less risk equals more confidence. And less indicators or fewer indicators equals more clarity. In trading and investing, less is more. I thought that might be a pretty good one. And I also saw over on X, Ray Dalio obviously posts these things all the time. I thought this was an interesting one, which is just evolve or die. And you might say, well, that's pretty wild, but it is pretty much very important to stocks and investing. There were certainly indicators that I used 10 years ago that are dead. They just do not have edge anymore. And they did for a while, and then they didn't. I think one of the things that you always want to think about in investing and trading is constantly evolving. And I do want to say to you guys, thanks to you, thanks to, your support of this community, I've always been encouraged to constantly innovate, constantly find new stuff, share it with you guys, and bring it into the daily show. And I think this one hit me over the weekend when I read it. And I went, yeah, well, I already believe it, but I just saw it. And I went, you know what? Yeah, it's constant innovation is a key. And I often kick things out when I think they stop working and obviously replace them with other stuff. Most notably recently, the sentiment survey reports, which obviously are skewed politically. And therefore, you'll notice, do we use them anymore? They just disappeared, guys. Why? Because I think it's broken. And for the time being, it may not be broken in the future, but it's broken right now. So they're skewing politically. And that is a super important thing to spot in markets. Anyway, let's get out of that and have a look at kind of what's moving the markets. Probably the most surprising thing of the day was Bitcoin it dropped off a bit of a cliff here. We'll look at the yields in a moment, but with Nvidia, just expect it to be a big move. You guys, it seems like in the chat, said that you'd wait and see. Fair enough. And it seems to be the most common answer. But Bitcoin actually took a low. Now, I wouldn't have suspected it would have, because it actually rallied up based on Fed Chair Powell's comments. Obviously, what did he say? He basically said we're going to try to lower rates pretty much because we need to deal with the unemployment spike and we don't care about inflation for the time being. And that means that the dual mandate is now the single mandate. Jobs, 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 jobs. So guys, remember, first week of every month is non-farm payroll. So that's something you have to look into. And we'll be, of course, tracking that one and the revisions. But the surprise here was Bitcoin took the low. So it actually took a 112 and then didn't. It rallied a bit, but I think it's going to need to get back past this, because basically what this is it's come back to this block. And then it's attacked these stop losses. So it's effectively hunted the stop losses that are here. It, in my opinion, did give some signs of recovery, which was this. Then I would have thought maybe here or something, and here it might have started to recover. It didn't. And that's okay. Sometimes it's going to be, you might have a trade that goes wrong or something like that. I would have thought that would have recovered, but I think statistically it would have. But now that it's done this white low, if it then recovers past, like, let's say a 116, 117 kind of area, I think it's quite strong. But at the moment, you cannot deny the bears currently have it in their death loop. It's one of those Crocodile Dundee death rolls, guys, because there's nothing really bullish about that. What do you guys think? 110, obviously almost getting hit. 106, 105, theoretically the next support after here. How low does Bitcoin go? Is it coming off this point or is it going lower? Let me know in the chat. I'll highlight a couple here. I told you Bitcoin is destined to hit 100,000. Well, Bitcoin at 100,000, which is the traditional destiny of a pullback, would be around 20, which would fit into the narrative that we've been discussing, which is the bear trap followed by a final bull run into December. So that would be actually not too bad if it did happen. I know it seems bad, but it's not too bad. But yep, that is there. MicroStrategy is uncertain about Bitcoin for the first time in 1.5 years. Yeah, so with this MicroStrategy thing, I think it's hey Jason, glad to have you here for the first time. I think the thing with the MicroStrategy, you can correct me if I'm wrong, but am I understanding they gave away that kind of NAV principle, which was what, a 2.5 times multiplier on Bitcoin? You must realize, guys, I'm not a huge. I don't mind if you make money out of MicroStrategy; it's all good. But I'm not a huge fan. I think it's a genius that is making a lot of money, but I think everyone jumped on board the gravy train of MicroStrategy and the way it works. So, what is there, 140 companies or something like that do this at the moment? So I'm assuming this is just compressing, and the problem is that is going to end up pretty low. I mean, does anyone think it's going to hold a 2 NAV or a 1.5 NAV or whatever? I think it's going to compress pretty heavily back in. Truly Messiah says MSTR is done and peaked. Well, actually, let's go to a poll survey here, because some of you big brains out there care more about MSTR than me. So let's have a look and let's see. Has MSTR peaked? Okay. The answer is yes or no. All right, here we go, guys. Chuck that in there. Thank you also to the 700 people joining us here. If you can, give it a like to the stream. It does help out. And obviously, always subscribe if you enjoy the content. So has MSTR peaked? Let me know. I think 109 will hold and we'll see 100. I think if 109 doesn't hold, I think we'll see 101. Yep, crypto is part of its seasonality pullback around here. Yep, so that's the argument. September, late August into September pullback, followed by a rally into December is the traditional. We have that in our daily show. Been talking about it. No, because the markets stay irrational longer than we predict. Yep, okay, that's a good quote. S. Brown says, and Tom Retrust, thanks very much, sir. My answer is I don't care about MSTR. Fair enough. No opinion, all-time peak. No new high ever. Probably all-time. I guess that's a good point. Is it all-time high ever? Well, or is it more, have we peaked on NAV? So I think we've peaked on that principle. I think that's pretty clear. Now we'll go with has it or peaked at all-time high. Let's see. Wouldn't strategy go up Bitcoin after alt season? Well, it depends on the multiplier. That's the big component here. So, it's obviously not gone up as much. I should just load it up so you guys can see what I mean. Because if you haven't been watching it, notice it peaked over here at the highest multiplier. And even though Bitcoin has gone on to make a new high, so if we overlay Bitcoin onto this just quickly, so you can see here, guys, what you'll notice is that Bitcoin's gone on to make new highs past this point, but obviously it's compressed a little bit. So, theoretically, if Bitcoin went to ballistic numbers, of course, it would theoretically be able to get back above. But it's an interesting one. Anyway, maybe a poorly worded question, but still, I think the NAV is going to compress here. So, guys, that's one thing. I think Bitcoin under 112, you've got to wait for more information. Ethereum had a monster run, just quickly here to start with the crypto market, because they were the ones that have actually opened and traded a bit. So we clearly saw this level here, inverse, break a trend line, very similar to actually the Bitcoin scenario, but just Ethereum just rocket shipping in comparison. Almost the same setup, but this one had that little inverse. Did anyone actually get that? Well done if you did. That was a fair rally throughout the session. And then, of course, we had the US 500, which did okay, got back up near the highs. The NASDAQ, which did poorly. I give you guys credit. Well done. Let's give a clap. And you know why we clap? Because we were right about one thing, guys, and that was that we were seeing rotation from the sneaky Wall Street out of momentum and into other weird and wonderful creatures. We saw the Russell 2000, of course, rally to a new high, not all-time high, but new high, which kind of signals that pullbacks will probably be met by bull demand, and the market will ultimately want to be ending up at 2430. We saw KRE, which is regional banks, obviously load up as well to a new high. Again, that is not a bearish sign for markets when that type of thing happens. And we saw value funds go to new all-time highs, which was pretty nice rotation off a dull market. So for me, I guess what really happened last week is it solidified what we were seeing underneath the hood. And it also solidified why you have to look at flows and price action and technical analysis and keep it simple to a degree. And I think where we do things a little bit differently, which is that you can actually see a lot of these moves before they occur. Now, did I know that, Jerome Powell was going to come out and say policy shift? I guess you could probably argue the guy looks stressed off his head. And you could certainly say that he's never, since he's been at the Fed, ever really done anything, wild. He's always kind of just like stood in the middle of, which is the lesser of two evils kind of concept. So yeah, I mean, it's pretty predictable that he was going to say either the policy's left open for a cut or something like that. He ended up basically saying we're going to do multiple cuts. So that ended up being the more bullish scenario. But yeah, I mean, it's I don't know. You never know that the market's going to move that much off the same words. He said very similar things for quite some time, in my opinion. So when you think about it, realistically, it was an excuse. And they're like, yeah, Jackson Hole. So that's how I see it. I mean, do you guys agree? Do you think it was a bit of an excuse? Okay, let's set it up. I'll show you why I think it's an excuse when you look at the tweezer that's on the US 2K. Look at the tweezer down here. Little rejection. The old sneaky tweezer in direction of trend. Not exactly the most bearish signal you've ever seen in your life. And did anyone get the tweezer? Let me know. Gas and utilities, how are they doing this morning? I haven't looked at gas, but I do think, unless you're being gassed by energy, and oil is up 0.4%. Depends. I never know. Americans call gas fuel. We call gas natural gas. I'm confused sometimes. The biggest excuse market in recent memory. This is the biggest excuse market. And Powell got big time caught off guard by the jobs number revisions. Now we know he screwed up. Yeah, could be that. I don't get one thing. Why is gold moving alongside the market? Isn't it supposed to stay in opposite directions? Definitely not. I know it's because of rate cuts and wars, but still it's making The worst of the year for trades? What the? No, no, no. What? The worst? How is it the worst of the year? Whoa, 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 whoa. How is it the worst? You mean for trades? Is that right? Because it's stuck for a few months. It's like one of the best performers this year. Gold stocks, incredible performer. Gold, incredible performer. I think what you mean is it's not because it's range bound. It's not moving that much more. All right. I understand your question. I almost like my eyes almost bulged out of my head then. I'm a bit of a fan of gold. I'm a bit of a fan of gold. It's been up there. I'd say metals in gold has been damn good. Actually kept up with semiconductors and most AI stocks, frankly. I'm getting greedy, and I think it's the worst time of year for it. Yeah, usually look, this is a intuition for yourself. If you're getting greedy, look, there's only two emotions you need to worry about in this world, and I found this to be true pretty much with everything. Everything else is irrelevant when it comes to making better decisions. Greed and fear. And just remember, guys, fear is 2 times stronger than greed. They are the two main emotions the market will rip on. And I know it seems really basic, but it's actually super important. If you can harness temperament to not feel fear and greed in any rate kind of feeling, or if you do ever feel them, then that is often your own body telling you don't do it. You're going to regret this because I'm feeling a certain way. Extreme fear could be an extreme buy. Extreme greed could be an extreme get out, just chill. There might be a little bit more. There usually is. And then all of a sudden it goes bad. But yeah, this is a classic case of where the market actually showed that it probably wanted to move up here. Now, of course, it could have gone backwards, but I think there were some signs in there. And the main signs were rotation. We'll get back on that gold thing in a second. So, for me, US 2K, it's in the middle of nowhere. You can see it's hit like a very temporary kind of zone. I don't know if that's enough to stop it. To me, I would think that ultimately going to try to go for 24.38. And we obviously did see some activation of rotation, enough new highs across the board. So even though it's pulling back and everything's going to maybe have a little bit of a breather here today, I think it looks pretty good. Another market that we've been going through in terms of rotation has been China, and it had an epic good session, 1.51% up off the back of 3 monster days. That's actually up, if you can believe it. The Chinese Shanghai is up 4.61%, so it's even better than the Russell, and it's at a new multi-year high, which we reported on, and this is directly because of liquidity. And I know a lot of you might say, well, I don't care about this market. Sure, but you've got to ascertain that this is the second largest major market, and it's been getting pumped by central bank liquidity, and this is the type of market that you want to be in generally. But I'm not saying go buy it now, but you do generally want to be following the flows. And that is, again, something that we've kind of talked about for a while. How long have I talked about this market for, do you reckon, guys? A little while, yeah? I've come to realize when my stomach is absolutely awful and every thought I have is a reason why the market will keep going down, that's when I need to be buying. Yeah, it's hard, yeah? I always say if the chart, the leading star is the chart. And if the chart says you should be buying and your mind says it is the worst feeling in the world, I cannot do it because I'm so scared, that could be a decent time to consider, yeah? Good buy back at retest of 36.90. Yeah, I mean, if it gets back to there, like a bit of what we call roll reversal, previous resistances become support, certainly a possibility. So to repack so far, we've got kind of crypto in a bit of a bear clutch at the moment in terms of Bitcoin. We've got the Russell kind of looking a bit more bullish. China's obviously getting liquidity. And we've got the US 100 looking a bit poor. The chart I'd be watching for that is going to be this one, which is PLTR plus mags. That's the top 10, down today more than the market. So obviously still seeing rotation, and the equal weight technology sector as well. Because if this gives up the ghost, that's going to be a fairly key level, I think, as well. So another good chart just to be watching at the moment if things do actually go bad. Do I still expect Q3 to be volatile? Yes, I still think it is, because you may have seen on the weekend video that we had what happens coming into a rate cut after a pause for a while, what happens after. And there are two bullish scenarios and two bearish scenarios, but you tend to find out what's happening within the first 1 to 3 months. And it all comes down to market structure. Yeah. And I prefer following the market structure like we did last year than following some random stuff that is not going to be as unique at being able to figure that out. I think that's, again, not really your opinion. It's what the market's telling you, and it's using some great data points from the past, which is pretty sweet. Andrew says, I don't trade weed stocks. They are so volatile. Yeah, you got to know what you're doing here. They're like a penny stock, well, they are penny stocks, or they're kind of almost these gamblery style stocks. So you got to be careful. They go up, they go down. Andrea says, smoke the weed, don't trade it. My Tilray leaps are looking better these days. I got them for nothing. Okay, good luck, Sticky Monkey. Hopefully that works. And yeah, that is that. All right, let's go over to one of my new sectors that I'm starting to look at again, which is the dreadful oil sector. What do you guys think about this one in the chat? First off, before I get my opinions on it, is the oil sector about to actually break out, about to improve? Hated for 2+ years. Okay, hated. Pretty weird oil prices because of geopolitical tensions and all sorts of things. But all of a sudden, we are faced with the dreaded word stagflation. And oil does tend to do a little bit better in stagflation. So that could be a temporary storyline. I'm not sure it's the reality of the situation yet, but it could be a storyline. And that storyline could turn into a bit of flow. So we find ourselves here at resistance into the oil trade. A few of you guys have commented in. It says, Kevin says, oil is going to get crushed if peace is declared in the Ukraine. Okay. Not sure if that's going to happen, but anyway. Bear meat is great to eat. Okay. Kind of looks like it's basing. No. Yeah, that's right, John. Its structure is improved, hence why I'm suddenly looking at it. So again, not really my opinion too much. I'm just looking at the structure. No on oil from American Psycho. American Psycho sounds scary. The movie is good though if you haven't watched it. I'm never buying oil again, says Jack. No, bull. Is this wheat? No, it's not. GDX gold is coiling to catch up to GDX move. Yep. Well, GDX already, it's catching up to gold, actually, ultimately. But yes, I get what you're saying. Electric cars are taking over oil demands. I don't believe in that narrative at all. And I'll explain why. AI. There we go. It's not the narrative. I do not believe to build out electric cars, we ultimately destroy so many things. To build AI is going to take extreme amounts of energy. To build the infrastructure of the war machines that are going, wait, we can't say that live, of the peace machines is going to cost a lot of energy. And we know that every European nation is currently doing it. That's why they're all bonkers in terms of how much their stock markets are up. So I don't feel the narrative. I understand the thoughts, but I don't feel the narrative. I don't think so. So I think you're going to get quite a lot of burn still. For now, defense machines. That's the word. We use defense machines. Can I call them peace machines? Probably, I don't know about that. Anyway, US oil here, resistance. And you can see that we have some form of base structuring. Where a good tip with oil is if you're ever looking at oil and you're starting to say, well, maybe it's improving, is to check both Brent and US oil. So anyone guess what that might be looking like? Actually, on the, we'll give you a, what time frame could we use to make it look the best? 4 hour look pretty good. Kind of looks like the little bit of here of an inverse, and you can see the break has occurred. So again, has it based? I mean, some people could argue that the oil the oil barrels have based a little bit based on Brent. And if we then look at energy stocks, you can see here that we've got some improvement from last week. And the main thing I was looking at is the two dojis, which were on the weeklies, and then we actually closed above. So, there are a couple of key levels to look at in the future. New high here will be important, $90. So about there. And then ultimately, of course, 94. But you can see it's done nothing since May of 2022. It's actually at the same price. So that is superiorly underperformed. And I don't really like oil most of the time, as you guys know, but there are some improvements in structure. And this is that of not so much evolve or die, but you've got to realize that sometimes these things happen. Some of them are better than others. Like if someone said, is a setup on biotechnology as good as a setup on tech stocks? No, the tech stock setup's way better than biotech because biotech's way more risk. It's notorious for false breakouts. But is a setup on energy as good as tech? No, again, tech is more bullish than any of the other sectors predominantly. But we have seen a movement. And this has been one of the worst sectors of the last couple of years. In fact, you could load it up and you'll see it's pretty bad. So it looks like there's some life in it at the moment. We've also seen a little bit of life in those catch-up trades, which I've been talking about, the iron ore stocks. I'll just show you the Australian market here. Iron ore stocks have been improving, something we've covered in our private community as well. So there are some improvements going on underneath the hood, and they've actually consistently done well. Again, just remember, guys, abundance mindset, plenty of opportunities. Okay, let's go over to the next opportunity here. Energy stocks may improve, but what about this coil? So, I'm a bull on gold. I'm a bull on silver. I like both. I'm a bull on Bitcrap as well because I think they are the holy trinity of the fight against fiat in terms of what the general market kind of is looking at, or at least people don't believe as much in fiat anymore. I think they will a little bit when volatility really kicks in. But you can see here we've got a series of lower highs and a series of higher lows. We're stuck in some form of symmetrical or pennant. We've been in a bull run, so you obviously have to expect bullish action to be stronger than bearish action. And I think the keys are the same. 34.50 for a breakout properly. 33.75, certainly a first good key though to see some market action. So I like the strength that it's shown recently, and I'm hoping it can break out above. And silver did the same thing, got a new high, not a new high, but new high off this. And you can see here it's kind of done a little inverse head and shoulders as well. So something like this, I'm hoping for on silver and gold. So still more on the bull end than the bear end, but gold's move might be epic because it's coiled quite tightly. That's actually been sitting there for months. And you might say, why has gold been so crap? Because it has been the most crowded trade over on the left-hand side. And when something gets that crowded, it tends to underperform. And you'll know the most crowded trade at the moment, the old US dollar. So that was the most crowded trade. So that trade's unwinding. And look at the stock. Not the stock. Look at the coin. The coin. Talking to cryptos now. Look at the currency, guys. The currency. There it is. It's done nothing. It's gone up a little bit. That was okay. And then it's just chilling. And as I said, everyone's trying to kill it and saying, oh, the dollar's dead. The dollar's exploding. The dollar's on fire. The dollar's, burning everywhere. Every article is about that. But realistically, while I've expected all year, and you guys have as well, the dollar to fall, this is not exactly the point where I'd be like making huge dollar short positions, because it's exactly where you expect lackluster returns. You see what I'm saying? So flow rotation, very, very important. I write courses about this, by the way, over at fxevolution.com. And I'd have to suggest that if you haven't, try consider the advanced. Pretty good. A few of you guys have probably done it. The next year and a bit are going to be, I think, absolutely wild. Not only on euphoria, but I think they're going to be wild on the back end as well. All right, let's keep going. So we've got gold, silver, kind of bullish on those. Copper, copper. Iron ore, obviously feeling better. Oil, looking a little bit better. Dollar, meh, but it's, again, I'm kind of skewed a little bit more bullish at the moment because of the inverse head and shoulders, because of the break of the trend line, and just in general, Even though I know there's cuts coming, just in general, I don't know if it can go anywhere. So I think it's just kind of stuck, and it's not you're not wrong not to necessarily trade it if you don't want to. There's not that much edge there. Tesla, you can see big bounce and not much else. So 350 and 380 this week, both worthwhile watching. Big tech stocks, the Apples, the Amazons and stuff. Oh, look, I mean, Apple looks like it's playing a bit of catch up. Amazon. Anyone interested in Amazon at the moment in the chat? Google, still technically cheap on paper, but it did what I wanted it to do. So I give it a tick. Well done. Nice work. Got back up. Microsoft's overpriced and probably going to do nothing. Nvidia, focus of this week. Very tough. Stuck between 170, 185, guys. And Meta, I don't understand this stock. The last time I don't understand this stock. I got to be real. I just think it is. I don't look. I guess I pseudo own this thing, but I don't personally own like directly Meta. It probably was something I missed a little bit in terms of how much it's gone up, but that's okay. Other wins to be had, but I don't know. I don't trust this stock very much. I never have. I'm gonna be real. Maybe I just don't like. I don't know. I just don't like it. Anyone else feel that way? Jack says I hold Amazon. Yep. Tesla is a bull trap. Well, the trend is still currently holding up here. Tesla is like that person in a horror movie who gets killed the first. Oh. Does gold and the dollar being the most crowded trade say anything for the broad sentiment of investment community? It just says that those were, well, yes, it says that the broad investment community, at least since Liberation Day, has been bearish. That's what it says. Because that basically is telling you everybody thinks the end of the US is here because they're all trying to buy hedges and sell the dollar. You get what I'm saying? Now, I'd like to say that we were early to gold because gold and Bitnoodle and all of these other things, they were already looking good just because of the geopolitical tensions, the type of the cycle, all that type of stuff. But yeah, I would say that's what it tells you. But that's why we can't use sentiment reports anymore, because the sentiment reports are skewing political. They have to be. It doesn't make any sense. They went haywire about like 4 months ago. And if you notice, how long has it been since I've really talked about it properly? Remember, I used to use them every week. Every week, let's talk sentiment and spread, guys. Every week, let's go. And we had to dump them because they suck. And I know what's wrong with them. They're political. They've got to be. And I don't bring politics into this because we're not going to do that. But they're clearly inferior data. Do you guys agree? I mean, it doesn't matter which side you're on. I'm just saying I think there is something wrong with the data. So we have to learn. Tyler says here, how much more can ad revenue really keep it going up? Do people really click those ads on Facebook? I guess they do, man. I mean, the actual community of Facebook has been dying for years. It's like the late stage of a business, theoretically, but that's why I'm not that interested in it. But yeah, it just keeps going up. All right, let's keep going. So I guess the big storyline has been yields. We saw the 2-year yield kind of go back down, but the 30-year yield stayed high. I will do a yield special at the end of today. It's got down as one of my storylines that I want to talk about because I do know that the German yields, is it J? What is it on this platform? J like this 30Y? Is this how we get it? Is it? What's the code on TradingView for the German 30Y, guys? Can someone give it to me in the chat? I forget what it is. We can have a quick look at it now, but clearly there's a big discrepancy between the 30Ys and the 2 years, and that is already a bit of a worry because it's basically telling you that we're the market. Remember, who decides the short yield? The Fed. Who decides the long yield? The market. The market's saying we're going to have inflation again, basically. I tell those in their 20s, Facebook is the salt and you are the slug. Follow betting markets because the money doesn't lie like the news does. Yeah, I think that's fair. The betting markets are generally, but they're not necessarily good at the predictions that I want. So I'm using betting markets to book against economists. So if you look at let's say rates now, that's a great evolution story. I used to use for rates the consensus reports from the economists, but they do often say how many economists does it take to be right. It's kind of like that electricity thing. How many electricians does it take to change the light bulb? But in this case, the rates kind of changes. I'm finding you are better off using the betting markets, and that's why I'm using them. So the betting markets are now actually how we decide on rate percentages. DE30Y. That's the my goodness. It skipped me over there. Bloody DE30Y, sneaky. Look at this thing. Look at these yields going up. Hello there. Hello there. We just surpassed, and this is why everyone's talking about, by the way. We surpassed the peak. Look at this. Sending, beautiful ascending triangle into it. So the story is here. Are we heating up the economies too much again? And remember, what does well in inflation? If that is the storyline the market's going to go to, because that's what this is kind of telling you. Could be commodities. Yeah. MDE30Y. There we go. I just want to see silver in the 40s. Fair enough. I want to see silver in the 40s too. I work at digital marketing and use meta ads every day, and I hate it. Hey, you can't even don't look. I'll give you a tip. If you're thinking about starting up your own social media network or whatever, I probably wouldn't be doing it over there. I think unless you want to pay money for everything, that's the big one. It's going to be expensive. How far are we into the first yield curve inversion event? It's happened twice in this cycle. Yeah, so that's a good point. So this is, of course, US 02Ys versus US 10Y, etc. So we'll just quickly load up one so you can see it. So this is the uninversion, which is back in August of last year. And notoriously, an uninversion of yield curve has often headed into a recession. Now, of course, that is a little bit different this time, but probably will ultimately be correct. I think this one's quite late. So I think it's going to be like a 24 months, which puts us into like 2026 mid late. I woke up this morning and I just went short on the US 500. Okay. Open pullback. I would like to see a pullback after Friday's exuberance. That would make some sense, but you're just dealing in smaller percentages here. But this type of, exuberance often does suck in a lot of people to feel that last tinge of extreme euphoria. I think really what it showed me is not so much that I care about the indices, because I don't. I think the rotation that we were spotting really played out properly, and that's what I'm still looking at. I think this is a rotation style. What could trigger for gold to increase if the US dollar isn't going anywhere just due to inflation? Well, inflation itself is not good for gold. It would just be, well, it's a mixture of demand, isn't it? I mean, you've got central banks around the world purchasing it. You've actually got rate cuts, which is notoriously good for gold. Let's just tell you that. So that won't be bad either. Yeah. Rare earths still look good. I've liked rare earths for a while now. Kids should just buy a house like I did. Yeah, but the thing with houses is they're expensive and not everyone can afford them. And they're also highly costly. People don't quite, I think the average statistic I saw in America was the average household was spending something like 20K a year, maybe upgrading or maintaining it or something. It was some absolutely wild amount. Now, I don't think that needs to be that high, but you will be out thousands and thousands and thousands and thousands and thousands of dollars holding any housing. And I think the big thing about housing compared to markets, guys, is liquidity. Let's be real. You want to sell your house? if you're in the wrong part of Florida right now, you might take a while to sell it. It might have to be dropped 10 times over. You know what I mean? So it's not liquid. I mean, how many of you guys, well, pretty much most people here probably bought or sold a house. Tell me this. Okay. You're using aliases. No one needs to know. How many of you actually only had one buyer interested in your house when you sold it? Not two. It was really only one buyer. I'm sure the agent was like, hey, so many people interested in this house, man. You got to get your best offer. Sharpen the tip. Sharpen the pencil. We need the best offer forward. There's competition. There's competition. You want this house, the dream house. And there was only ever one buyer. I always look at housing. I'm like, laugh so much. I mean, I love housing. I love housing. It's my second passion. Yeah. But the thing that I laugh about is it's always just like one buyer for like 60% of houses. Too funny. Wait, you guys are using aliases? That they are. Look at they're using aliases. Check it out. Jesse's not though. Jesse's he's prepared to say what he means online. So anyway, when you see this uninversion, you don't need to be too terrified instantly, but we are now 12 months into it. So it starts up. Housing sucks. If you have maintenance fees, mortgage rates, it's not liquid, and stocks have offered higher returns historically. Yep, but a lot of people fight with this idea. I like both. Again, they've both got pros and cons. Matthew says, I was the only bidder. Well, hopefully you got a good price. Alera says, I ain't going to lie, I'm on welfare. No, nothing wrong with that. Got to, hopefully you can turn it around and get to what you need. Terrible market, Boston area right now, frozen. Yep, it's frozen. Renting over owning at the moment. I've heard that it's better in some states in America and even in Australia as well. What is the for real average price of a home in Australia? Which area, guys? You interested in knowing? I think you'll be horrified. Let me just tell you this. In Melbourne, which is where I live, guys, it's about $1 million for the average. And you would be horrified at what the average looks like. Let's picture this. Brick, single level, 1960s. No renovation. A barely used toilet. It's not straight. You walk in there, it's 3 different angles. You're going off, you're going left, you're going right, you're going up, you're going down, and the water leaks through the roof. $1 million. Now, you go to Sydney, which you guys are aware of, same house. 1.5 million Aussie smackaroonies. It leaks. It has a barely functional toilet. And it has 3 different floors. And that is the true story of Australian property. It's true. It's ridiculous. Everything's $1 million. It's all good. $1.5 a dues. Yeah, that's right. All right, let's go back to the market here. Some Australians in there, chuck your comments in to verify. I think Sydney might be even more crazy. Maybe it's 1.7 million now for the same thing. It is absolutely out there. I think we've got some of the most expensive in the world now. But remember, your roof will leak at those rates. It's pretty wild. So being homeless is the way to go. Hey, I wouldn't say living in a caravan park in Australia would be that bad, realistically. All right, let's keep going down. So we've got the mag stocks. They've lost a bit of their heat. We've got value stocks, which I think look pretty interesting. So let's just go back over to the value fund. So this is just a value ETF, just as an example. Obviously, there are plenty of value funds. But you can see here, guys, that we've got this nice extension moving through. So the V-shape happened. It consolidated and did nothing for a while. It's underperformed. But what I like to do is I like to sometimes look at these codes and then I put them versus the S&P. And I say, okay, well, has it started to improve? So we just started to see about 2 weeks ago, slight improvement in value over the rest. And that may continue. So, of course, it's something we'll track on the show. But that is something we did see last week. In terms of opportunities this week, I think the main thing is to look further into the rotation side. And also, I'd probably be looking for potential pullbacks in maybe the Russell or even the crypto because I think that's one of the big things here. Established yesterday says Tom Lee has been saying that we are probably at the start of a bull market and that financials may go on a growth run inspired by AI and crypto services. So it's a very interesting concept. I understand the principles. So basically, the idea is that we're at some kind of hallucinogenic run based on wacky new products, which will ultimately end, by the way, in a crash for sure. The reason why I'm so confident that that will end badly is because there'll be made up financial stuff. It's possible. I mean, I will say that I think that margin's pretty high already, but the argument here is likely to come to fruition, as in not so much necessarily how much more do we go up, but that financials will come up with all sorts of new weird products to do with crypto and bridging this and stuff. I mean, MSTR is the flavor on top of what we're seeing here, tokenization, all these types of things. I understand it's pretty alluring. Not sure I love the financials, but they will, halve their staff numbers, make more money from that. I don't know. What do you guys think in the chat? SoFi, I'll have a look at some single stocks. I'll check it out here. So SoFi still rallying, dude. Hit my target. So I guess at the moment it's just kind of in the new twilight. It's not quite at those highs, which is probably about 26, but yeah, very strong trend. For me, kind of I like 23. I know it's above that now, but that's what I liked. And usually when I hit my target, I'm like, nice. But the trend is not over. It's clearly, it's getting volatile. And you know what I think about volatility. I hate it. I don't like vol at the highs because this was really nice. It was really nice. Little train, beautiful train. And then the train went, whoa. It was like Tintin. So not a big fan. Is value mostly dividend playing stocks? Yeah. And the reason why they could pick up is because we basically will see the dollar or the US yields go down. And I think that there'll be a hunt for yield because basically if we see interest rates go down, there could be a hunt for yield. Is value mostly dividend? Yeah. Sorry, that is, yes, the same question. I met an Australian in the Philippines from there recently. Mm-hmm. Let's see if anyone here said that is the correct story on Australian housing. Michael says you're describing my house. Michael, that's crazy, bro. Tom, is REMX bottomed? Oh, a while ago, dude. Yeah, we've been looking at that for a long time. 1 million for studio apartments. Yes. How are prices in Brisbane? $1 million. Melbourne's cheap compared to Sydney. Yeah. Well, you got to. I added $600,000 to the same house. That's pretty much about how it is. Good morning, SPS. How much land can you buy in New Zealand for $1 million? New Zealand's falling at the moment. Mass exodus. I do love New Zealand. It's a great place if you're retired. its economy is not there, guys. It's not there. It is not there. Yeah, pretty much. Why is Australia so expensive? Oh, many reasons. Anyway, that's all interesting. Very, very good. You guys are funny. It's gone up because of a Love Island TV show. I don't think that has made it go up. So yeah, SoFi is certainly still rocking a little bit better than the rest of them. And that's probably because maybe this is the weird, wonderful technology that Tom Lee is talking about. I did watch a little bit of his interview. It was cool. I haven't finished it. I'm always interested in hearing that. I love Tom's. So Tom Lee, I'm Tom Atkinson. Makes sense. Big brains in the stock market world. But in general, he's on. He definitely thinks about things obviously very optimistically, and I can see some of the reasons. But at this stage, how do I see it? I think that for a market to really explode, you got to have everyone all in. And I actually did a search, and maybe I'll put it in one of the videos. And what I found was that bubble, so that is stock market bubble, search term, is skyrocketing at the moment. And one thing I've learned about history is that when everybody searches bubble and thinks it's a bubble, is it generally over, guys? MSTR poll is 50-50. And we'll close it up. You guys troll me with your polls. Every poll, 50-50. I got a new poll. I'm going to fix this. Get rid of this poll 50-50 crap. Wait a second. We need to get here. New poll. All right, here we go. Let's see what you guys do. We got the real poll coming in. Market bullish or bearish by the end of the week. All right, let's see the barometer here from the smart people out there. No, nah. That's right. That bubble gets more soap every time someone searches it. Yep. It's not a bubble when I know it's a bubble. Oh wow, that's an interesting concept. It's not a bubble when I know it's a bubble. I just have to think about that for a second. I'm just thinking about all the great runs that I've ever seen and whether I felt like they were bubbles at the end. Yeah, I did. I think what it is at the end, you always think, oh, I know it's wrong, but I'm going to be able to get out first. Don't worry. These people are idiots. I'm getting don't worry about it. GameStop at 420, no problems. I'll get out at 500. I'll pull the trigger. So I think that's where it's just blatant ridiculousness. And you just go, it's not a bubble, it's just ridiculous. And I'm just gonna, it doesn't matter. So I think what Kate takes over is the second strongest emotion, which is greed. That's true. How do you guys feel? I think this is actually a very interesting question. It's not a bubble when I know it is. How did you feel in 21? Can anyone remember January 21, February 21? I remember that I wanted to buy the crappy stocks. I remember it bad. I was like, and I remember them going like this. They were absolutely hectic. I wanted to buy them at the top still. Like I felt like it, but I knew they were cooked. But it wasn't a bubble anymore. It was just like pure spec. So I think when something goes pure spec, it's generally over. It's just the speculation side. I bought crappy stocks, Tesla and Facebook back then. Do not expect a bull run until Bitcoin reaches 120K again. Yeah, that's fair. What's your analysis on CLF, American Steel? Yeah, so the old American Steel, hey? Been rallying. Nice change of trend recently, if I remember rightly. Yeah, so you got nice downward trend line breach. And it's very similar to what I've thought about a lot of metals. Steel, iron ore, that kind of thing. Improvement. This is not as good as iron ore has been. Nvidia will save my life savings. I'm ready to live under a bridge. Again, we'll listen to Red Hot Chili Peppers while you're there. Metals are down right now. That's okay. Doesn't have to be up every day. I do. Luckily, I sold November, but didn't trade at all in 22. I think Powell Day's moves were an overreaction. Yeah, I think they're an overreaction, but I think that it's just an excuse. And the question is that one of those sucker rally ups that gets pulled and then creates the pit? I think what's happening though is I think the rotation is relatively real. I whipsawed my investments then in 2021 and dropped 3% in potential earnings. That's not too bad. 2-minute warning. Thank you very much. 1-minute warning, Omar. So, all right, guys. So we're coming into the market open here today. We are slightly down across the board. Bitcoin's probably the big story, under 112. I think China's done very well today. It has been rallying. The Shanghai Composite was up a lot. Iron ore was being dragged along with that. And we've seen markets around the world mostly just play catch up to the US. Oil is a very interesting section because it's getting a little bit of love. Excuse me. As of the other market session on Friday. So it's kind of like that sector that I feel like a few people have gravitated to. I'd be interested to know in the comments whether you've seen other people suddenly mentioning oil or whether we're one of the first ones to get back on the potential here. And yeah, I guess for me, that was a pretty big Friday. Need to digest it. If you're going to go with the stats, pre-Labor Week's usually up. Post-Labor Week is generally negative, but that's just the data stats. So that would mean next week is negative, and generally markets are bullish into public holidays. I mean, overall, okay? That's just the general statistic of any public holiday predominantly. Yeah. So here we go. Ding, ding, ding. We are open and we are down on some stocks. We are up on others. You can see fairly flat here, guys, after all that crazy Friday action. And if we go down here, momentum kind of across the board, some up, some down, bit mixed here. Palantir, by the way, continues to look crap. I think it's probably done with its massive rally for now. I think there will be rallies up, and then I think it's going to chill. And we'll see whether it can get new highs. Remember, Kramer cursed it up here with his, I think this is the greatest. It's going to $200. Nothing is negative until you sell. That's technically true. But sometimes those platforms show it being red on there. If I buy oil, it'll drop to $60. Yeah, that's pretty true. Nvidia dropped consumer GPU prices. I don't think Jensen is happy with sales. Well, let's be real. Nvidia stuffed over gamers, frankly. Does anyone else believe in that? I mean, that is there. I always said this about Nvidia, and I've said this for a little while. It's not stock going down or up, but Nvidia has forgotten about their original people. And I never like it when businesses do that. Do UPS. Okay, let's have a look at UPS. This is United Parcel Services. You can see here, it's pretty much in a downtrend. There's no other way to look at it other than that is in a downtrend. It's hit a major level, major level, but it will take kind of getting up here to really turn it. Yeah. All right, let's see what the poll was. How many? 57% of you believe it's going to end the week positive. So pretty much a coin flip from you guys. But we really get screwed by the people mining Bitcoin. AI sector moving down at the moment. Yep. So let's bring up the sectors and have a look what actually is moving the market today. I've got them up here. Let's take a look here. So we've got gold stocks up the most, metal second. Nice. We got staples and ITB home construction down the worst. And if we go to the last year, you are going to see some interesting data. There we go. And you can see here that energy has sucked at a flat line for 1 year. Oil services has been horror show, but it's been improving recently. And XLV, obviously a sideways horror show pretty much for the year, but it was okay at the start of the year and then went bad. That's policy driven. You can kind of see here that there's a mixture of, someone said before gold was no good. I'd argue gold stock and gold has been the best with metals, actually kicked semiconductors' ass. So there you go. 3 years, though. Take a look at this. 3 years ago, semiconductors best, gold. Yeah. Home builders, strong but weak, I think, recently. And again, old energy. Look at that. Horror show. The horror show, guys. So maybe that one might find some love in at some point. Are you bullish on Q4? I think Q4, yeah, you probably would want to be. Data statistics, weight, breadth, thrusts, all those things are pointing towards yes. I think the thing here is that I'm just looking for a sign to say we've cracked. And, pullbacks are fine, 5 to 8%. That's pretty normal. We might get one because it's Q3. But yeah, I don't think, even though it feels wrong and there's so many things wrong with the markets, remember, markets can stay irrational longer than you can remain solvent. The market is not the economy. A good reading, a good kind of thing to remember. And I think that at the moment, you got to remember that AI can drive a bit higher ultimately, because it's all about those. It's all about basically these companies being able to say, we just don't need the staff, and that's their highest cost. And the market loves that type of thing. But that's going to be so bad. I don't see that. I think the market is bad for jobs. I mean, you guys are my eyes and ears. I'll tell you right now, Australia is tightening. I know people that are quite smart that are out of jobs. I know that businesses are firing contractors here in Australia. I'd love to know what you guys know in the US. What's going on in the US, guys? From what I'm hearing, it's tight. It's tough, as graduates can't get jobs very easily. I've heard that people are struggling a little bit when it comes to, even landing, new jobs with the same pay. They're having to take pay cuts. A bit more competition. It's not the market it was in 22, 21 anymore. Young men are joining the army for dollars. Oh, okay. That's interesting. Hale Junk says USA is cooked. Okay. It's a bit tough out there. Rio, come on. Yeah, Rio is good. We like iron ore. My company fired all contractors. We're not allowed to hire contractors for the foreseeable future. Interesting. Young people can't find jobs. That's in biotech. Okay. Tight, but only, but people doing their own thing is doing better. Yeah. Okay. That's interesting. The job postings are froth. They aren't actually hiring. Yeah, I've heard this. So they just what a waste of time. Hey. Oh, yeah. Actually, the worst thing at the moment that I've heard is that they're sifting all of people's resumes with AI. That sucks. This whole AI thing in hiring is going to be so bad. Going to be so many good candidates looked over because they've put some stupid parameter in the search. It's so bad. Trading's the new job. Yeah. Well, trading, investing. It's very, very much, I think, sector rotation, all that type of stuff. Ghost listings, they call them. Yeah. I graduated 2 months ago. Still can't find a job. PK, I hope you can. Give you a highlight here. Hope you can find a job very, very soon. Take a look at Hood. Oh, you say Hood's doing something. We'll check it out in a sec. So again, guys, home builders down, gold, metals up. Most of the rotation here makes sense. Energy is flat, slightly down on the day. All right, let's have a look at Hood, because that was another one of the glorious market rallies. Very volatile up here, which you guys know. I usually say that's the end of the initial big boom, and then we go into super vol. And then sometimes we'll keep breaking, keep moving in the direction of trend, or sometimes it will fall. But generally, when you get this much volatility, it's closer to the temporary top for now. Hood down 1.16. I don't think that's much going on here. Your true job is in TikTok. Nah, probably not for me. AI is pattern recognition. Rare earths, love rare earths. Some rare earths actually very, very rare. Very rare, needed too. MP, that had an epic run. A lot of you guys brought up REMX today, which has been one of my favorites for a little while here. See, that's improved. That actually started really rallying about June, so had a good return. A lot of people in the private community will be aware of that. 45%, not bad. Triple U, universal safety products. Sideways. Yeah, so markets opened down a little bit across the board. I think the story this week will be watch the yields, watch Nvidia Wednesday. I think oil is super interesting as well, as I've said several times. I usually hate it, but sometimes I like it. And the other story last week was actually NEO. This was found by one of our private community members. It was a good trade. So congrats to him. That was a great flag. You see the beautiful flag? Boom. Saw it here. We actually saw it earlier. And then it just went ballistic. Very nice. Again, you can find opportunity everywhere, and you can see why. I'm kind of like, okay, that was a great run because you take the distance. That's the traditional distance of a flag. It could go more, but it's still pretty cool. Copper, I don't like the copper chart. It doesn't make any sense anymore. It's been tarified. Coffee contracts up 30%. I'd stay away from coffee. You can drink it, but I wouldn't trade it. These contracts slaughter you if you get them wrong. When they roll, they absolutely maul you. But yeah, it might be getting expensive to buy your Starbucks in America, guys. Neo is a turtle that may win the race. I don't know whether the business is good or not. What do you think about nuclear? Already over? You are. Hey, there we go. No, I don't think nuclear is over. I think nuclear has more legs in it. It's actually a good dump rally here. I'd like to see it break the downward trend line and hopefully keep rallying forward. That's actually a fairly decent sign that maybe it will keep going. I think it's cheap. Coffee can destroy your account both ways. Yes. Jesse says, I'm a coffee roaster. Coffee is brutal. Yeah. Yeah. Coffee roasting's hard. Coffee's a hard business. I mean, I'm from Melbourne. It's probably well known to be one of the best coffee capitals in the world in the coffee industry. And I just think it's ridiculous. Like, we get cheap coffee here. It's actually ridiculously cheap because we drink so much of it. But it's wild. The coffee margin is so low. By the way, I recommend La Mazzocco machines. La Mazzocco, sponsor me, please. Please sponsor me. Don't look up how much those cost. They're not cheap. They're not cheap. Coffee's a drug, yes, but I'd take that one. Starbucks has been expensive. Better be making $250K a year, $250,000 a year to go to Starbucks every day. Truth is that people that shouldn't go are the ones that don't. Yeah, I get what you're saying. In America, I found out about tiny ice creams. I still couldn't believe it. Only in California can you have tiny ice creams. So here's what I saw. There was let's say this is a cup, okay? Now this is one. No, actually, we'll do it better. I'll just quickly draw this. I know you Americans already know this, but this is for everyone else. So these are the two kind of cup sizes for ice creams, all right? And then America sells this. So this one here is $3. This one here is $5. And this one here is $8. Well, actually, no, this one might be $4. So people were buying in California the $4 one. It's this big. I saw this cup. I couldn't believe it. They were buying it. The small $4. It was like, it wasn't much difference from the big cup. And they all bought this small one. It's funny. Oh my goodness. Only in cities? Yeah. Inflation gone crazy. Yeah, but they love the small one. They called it a taste. It was like if you put like a piece of ice cream on a spoon and then said, here it is. But the spoon is like a teaspoon. It's pretty funny. Only in Cali can they sell puny ice creams. Sizeflation. Yeah. We pay so that they help moderate our portions. Yeah. It's pretty funny. I just like I couldn't believe that existed though. I think of America, I think giant portion, and there was a tiny ice cream. Tiny. I did not buy the tiny ice cream; it was too small. All right. So anyway, guys, that enough talking about that. I guess the kind of rule and why I'm yabbering about psychology, these types of things, is because there's not really an excellent trade today, other than the thing that I've already mentioned 25 times, which is by the way up about 1% since we've started. But the point is that there's always another opportunity, but not every day is a great day to trade or invest. You need to sometimes let markets digest things. But I think what you've found, and hopefully you like this in the show, is that we do see rotation and flow. And that has been the pillar of this show for years. So we always look for rotation, we always look for flow because there's always a new opportunity. And sometimes there's great macro plays like semiconductors are the brain hardware of AI. So you kind of go with that. If you believe in AI, if you like liquidity, you probably go China. If you like hating on fiat, you probably go gold, silver, or Bitcoin. They're the macro plays. If you're betting on innovation across the board, you might just say Nasdaq. You know what I mean? Like they're the good investment macro plays, and then everything in between is the flows. That's pretty cool. Abundance mindset, absolutely. A few of you said that does help, so that's good. What about GDX? Is it still attractive? We'll just end on that one. GDX is less attractive, but it's still in an upward trend. So why I say it's less attractive is, of course, you want to use your combo. So you go like a GDX gold, or wait, which way do I want it? Yeah, GDX gold. So you can see here, is it still cheap? Yes, because it probably should trade at 0.02. Why? Because that's where it tends to gravitate towards. You can see it's kind of on its way to 0.02. Now, that doesn't mean that it has to keep going up. It could be that gold drops, but gold drops more than GDX, unlikely, and therefore it goes up. But you can see here, this is why we use ratios as well. So is gold still, GDX stock still cheap to gold? Yes. Are they still in an upward trend? Yes, but yeah. Tom, is coins run over? I think for at the moment, it probably is. You can see it hit the all-time highs. I thought it might have crapped out a little bit at 354, but this is why sometimes, again, I'm just being real with you. That's what I thought. And it went a little bit further than I thought. And then it topped out. And then it dumped down. And now look at it, it's cheaper than it was over here. So you never look back. You always try to stay in the present. You just look at the future as well a little bit in stocks. And yeah, there's, be confident in your decisions with your technicals. Technicals give you the best targets, best entries, and the best just strong consensus for your thesis. But the way you get to the thesis is generally understanding the flows. Why would one go with GDX instead of gold as a commodity? Because there's a ratio. So gold stocks were cheap in comparison to gold price because gold stocks had done horrible contracts on future price gold. And a lot of those have come up now. So they're getting able to reprice their gold contracts. And then you've also got to remember one of the strong patterns for gold stocks was that oil was dropping. So barrel cost was cheaper. Labor pressure was coming down. That means that they can hire staff a little bit cheaper or get more for the same. They don't have to keep paying them more and more money to go out to the mining. So it had some really good things. I actually like to usually trade gold stocks off oil price because it makes a lot of sense. Gold to oil is a great ratio. Gold stock to oil. Yeah. Why are Canadian rare earths rising? Why are all rare earths should be rising? Defense spend in Europe, in all nations, because of course no one trusts each other anymore, which is a bit sad. So there's many reasons why. I love the tiny ice cream. Yeah. Bitcoin is at 110 now. Yeah, it's dropping a bit. Yeah, there's a surprising drop. I mean, I couldn't rebuy it yet. So if I was in it in a trade, I probably would have dropped the trade because that's the rules. And now I'd reassess. That's fine. Sometimes that happens. Can't win everyone. Regarding gold, do you like GGN? I don't really like any particular miner. I don't really like any gold miners. I just like the whole thing. I like the whole hog, or just some of the winners. I prefer copper to oil. Yeah, fair enough. Oil is notoriously hideous. It's got geopolitical risks. It's got political risks in general. Trump wants it low. So if it ever goes high, then he may change policy to make it try to go low again. Hey man, can you educate me on why this ticker can go negative? What is it? Oh, why not just hold a long position on it since it's so cheap and wait for the fall of the Nasdaq? Oh, no, 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 no. This is a huge mistake people make. I will answer this before I finish. So, whenever you see something that looks like it's just been going down for a while, always remember to jump to the higher timeframes. Yeah. And what you're going to notice is that when you're looking at ETFs, levered ETFs, you might notice a scary trend, which is that they erode your cash when you hold them. So here is the beginning inception of the levered ETF. Okay. So at one point, this was worth $162,000. It is now worth $23. Okay. So that means it has eroded your original $160,000 to $23 over that time. So that's very bad. Yeah. The problem is every day they reprice themselves. So you get huge inefficiencies in these. These are notoriously bad. I think elite 3 times levered funds, ETFs, because they've labeled ETF, safe. Yeah, you know what they are, but they'll smoke you. I think these are going to unwind a lot of retail ultimately. Remember, retail has been jumping in on these super hard and super late. They're just buying them with leverage. They're using leverage on leverage that's inefficient. I mean, it's going to explode. It's the same as S triple Q. Yeah, they're all the same. So, what I would always say is have a look at the fact sheet, understand what you're getting into. If it says ETF, that does not mean safe. That just means it's an exchange traded fund. And I see this all the time. And it pisses me off because not for you, but for many people, because I have so many people that come to me and they say, Tom, what have I done? And I said, what have you done, bro? And they're like, I'm in Boyle. And I'm like, no, dude. And they're like, yeah, what? It's an ETF. I'm like, no, Boyle is like a bunch of futures contracts underneath. Oh, no, I don't trade there. That's risky. You are trading it. The ETF is a freaking futures contract underneath. So, maybe look at the fact sheet before you jump into it. ETF does not mean safe. Due diligence is a good idea. So, I always say zoom out, guys, zoom out. That is a big one. Yeah, we don't want to be getting involved in nasties. Oh, that's interesting. YouTuber copper oil ratio. Yeah. All right, guys. Very good. It's awesome to have you here. I know it's a little bit of a slower day. Watch Bitcoin. We love Bitcoin, but I get to call it Bitcrap sometimes. Then it's gold, silver. Man, I didn't really need to watch those. They are what they are. They'll break if they break. Oil, probably worthwhile. Interesting watching it. I'd like to see a pullback across the board to get back a little bit of what happened, but I think you can't say that Russell didn't break up. It did. So it did what it did. Liquidity in China, and yeah, at the moment we're looking at that rotation play. You have a fantastic week. I hope you enjoy the show. Make sure to give it a big thumbs up if you do, and we'll see you in the next one. And remember, risk warning. It's very important to be very protective of your money. You worked hard at it. I don't care whether you're working at McDonald's, you're serving the tiny ice creams in California. Tiny ice creams. I don't care if you made your money there. You're selling tiny ice creams, ripping people off that way. Then you got to make sure that you get the right investments and right trades. So remember, abundance mindset, always another opportunity. And we'll see you in the next one. Bye, guys. See you at the close.